It's nuts out there. So hey guys, how's it going? And thanks for coming. I'm Nick and this is Real Life Money, where we talk about real life and money because you know schools aren't. Don't forget to subscribe for more videos. So let's get started. We gotta get rolling, guys. So for this video, this is my 3 stocks for the next month of November 2018. I usually do this a few days earlier than right now. But there are a couple of reasons why I'm doing it right now. Basically because, well, obviously the market's been crazy. We're going to talk about that in a minute. But a lot of earnings are coming out. So I just didn't want to pick a bunch of random ones for you guys. I wanted a strategy, especially what would happen in the market today, which is, what the heck is today? October 24th. It's Wednesday. The market dropped. Let's go into it right now. The market dropped over 600 points. You could see NASDAQ, S&P, they were just slammed. So by the way, I'm going to have some timestamps in the description if you want to jump around to the different stock picks that I have. So I just want to talk about the markets right now. This is an excellent example of why we should diversify our portfolios. I know a lot of people love technology stocks. I like tech stocks too. However, these are one of the days where technology stocks suck because, you know, you might make a lot of money when they're going up, but what goes up fast could go down just as fast. So that's why having multiple different stocks is a good idea. I have multiple different videos going over how important diversification is, and the stocks that I'm picking for this month or the next month reflects that. And you know, I'm still optimistic for this year. We basically wiped out our gains for 2018. I still think, and other people do too, that 2018 is going to end up in the green. However, some people, including the Fed, are stating that the economy is going to be slowing down for like 2019 and 20. So that's why I want to start preparing for what's going down. So starting off with the first stock that I'm going to be looking at for November, especially with earnings coming up, I want to see how they behave, is Pfizer. This is in the healthcare sector, drug manufacturer, and you can see they have a nice dividend of 3%. The healthcare sector has actually outperformed every other sector in the previous quarter, which is very interesting. Now, Pfizer is something that I've been wanting to or a type of stock that I wanted to get into just because of their dividend. I wanted to load up on dividend stocks, especially with this kind of cautious, iffy environment. So when stocks are down, you still have that dividend to make you happy. So with the market right down now, there could be opportunities out there. Can it go lower? Unfortunately, anything can happen. So just keep your eyes open and just realize that. But I do think that this is going to be kind of a similar correction to what we had in the beginning of the year in February. It might take a little bit longer to rebound. But holiday season is coming up, and that usually makes stocks do a little bit better. So we're going to have to see. But I wanted to get into the healthcare sector just because it's doing very well. If you're looking at the long-term aspect of healthcare, no matter what happens in the economy, people still need their drugs, their medication, and all that stuff. So I think that's actually a really good long-term pick. These guys have been doing very well throughout their history. Nice dividend. And I was also comparing Pfizer to some other companies. Now, I did land on Pfizer, but I'll give you some examples of other healthcare stocks that I was looking at. I was looking at United Healthcare, UNH. That's more growth oriented, but their dividend is like around a 1.3%. So I do like the growth of it. However, I want to get more into dividend stocks, which is why I kind of favored Pfizer. Pfizer is also a little bit more steady. Now, the other company, Merck, MRK, they have a little bit slower growth or lower growth than United Healthcare, and their dividend is okay. It's around like a 2.5%. So again, Pfizer has a higher dividend than that. The other healthcare company that I was looking into, I actually did a recent video on it, was AbbVie. Very interesting. It does have growth behind it and also a nice dividend of around 4.5%. So I do want to look a little bit further into that. They are down, so it could be a value play. But for more like a safer pick, Pfizer's going to be my bet. Moving on to my second stock that I'm looking to get into for November is a real estate investment trust, a REIT. And we're going to be going into those, which are very interesting. But this individual stock is Realty Income. Ticker symbol O. You can see their year-to-date chart has been up, and they're around a 4.5% dividend. Going back to diversification, you could have multiple different assets. So not only stocks or dividend stocks, of course there are bonds. I'm loading up on cash, like I've said multiple times in previous videos. But real estate is a separate asset that you could get into. Realty Income's beta is 0.2, which means it's not as correlated to the market. So if the market jumps or if it drops, Realty Income could do something completely different. So Realty Income is awesome because they do have monthly dividends. I used to hold them a few years ago, and it's not a bad company. But I was just looking for more growth. But right now, especially with an increasing interest rate environment, I think REITs could be very interesting. Especially if the market crashes, REITs could still hold their own. They're made for income or dividend investors, as well as slow but gradual capital appreciation, because they are involved with real estate. Now, as interest rates increase, that screws basically everything up. That decreases like bond values. It could screw stocks up, also REITs. So initially, if interest rates increase, that could hurt REITs. However, if you think about it, with higher interest rates, that usually either relates to different rates that the real estate could get involved with, could be either mortgages or whatever. Also what they could charge for their tenants. So I think this is a great pick for diversification, because they do have, of the different REITs that I was personally looking at, it had the highest revenue growth of almost 10% year over year. It did have that low beta of 0.2, so if the market does anything crazy, this could do something completely different. And it is a bit steadier and just an easier investment. A lot of people know Realty Income because they are monthly dividend payers, and they've been growing that. Now, of course, there's the real estate index, like the Vanguard Real Estate Index, VNQ. That has basically every REIT in there. It's not a good thing, it's not a bad thing. Because it has just a bunch in there. Their dividend is just over 4%. Unfortunately, because it is an ETF, there is a small expense ratio. It doesn't like destroy the investment. It's a 0.12, so you're still getting a 4% dividend on the index. Just over the long term, it is more steadier, and if you don't want to choose like an individual thing, you could go straight for the index. Another REIT I was looking at was Ventas VTR. They do have a higher dividend. I think it was 5.7%, but it is a little bit more risky, and they are in the healthcare sector, like healthcare businesses. So they have like medical buildings, offices, stuff like that. Like assisted living as well. So baby boomers are starting to retire and going into these facilities. So that's why a lot of people believe in that. But I just think it's a little bit more risky. So that's why I didn't really go that route. The last one I looked at was Simon Group, which was SPG. They had the lowest revenue growth out of these different REITs. But of course, overall, all of these REITs could be good long-term investments, have a very nice dividend. So you could collect those while the market might be going down. Now, interestingly enough, all of these different companies are releasing their earnings within the next week or two. So they actually might get hit if they didn't make the numbers, or if people don't like certain aspects to that. So if it gets hit, it's definitely a very interesting opportunity. I'm personally going to be, I'm going to be looking at all of them. but I'm going to be focusing on Realty Income. If they drop, I would love to get into them. And of course, last but not least, the super aggressive growth stock, or possibly super aggressive, my third stock, which is Turtle Beach. You can see their 1-year chart. It's just been crazy. I've been looking into them to no end with this one, but they started this year around $2. Yes, $2. And right now, I mean, they're a little bit down, but they were around $20 range. Still, they're at 17. So they had stupid growth recently. Now, if you guys haven't heard of Turtle Beach, they make headsets and earphones. Well, yeah, like gaming headsets. And the gaming industry has been basically exploding in the last couple of years and has a nice future outlook. As a side note, another interesting gaming business is Activision Blizzard. They have been getting hit recently, have earnings coming out a little bit, so something to look at for gaming industry. But for Turtle Beach, it's been just all over the place. Very risky, very speculative, but it is interesting. So obviously you could see the tremendous growth that it has from $2 to $20. You know, that's timesing your money by 10, which is insane, and that's just in not even a year. It is down from its highs, so if it does rebound, it could possibly have a 100% upside potential. Just realize it is risky and it is a speculative play. Earnings are coming out in a week or so, so honestly, I don't want to play earnings. That's even more riskier. Could that make well, it's going to go either way. It's either going to pop or drop. We're going to have to see, but I want to see what happens. If it drops, it might be even more of an interesting opportunity. Now, I'm very interested about them because Turtle Beach, they do have the brand behind them. They are a popular brand. I mean, there's a bunch of other headsets for gamers out there, but they are one of them, like one of the top ones. Especially with the increasing gaming environment, the industry. A lot of people are relating this to Fortnite, one popular game. And there's people playing this all over the place, either on YouTube, on Twitch, I think it's called, streamers, tournaments. And surprisingly, they do have a low PE. We saw for here, it's just under an 11. So something could happen. There's a lot of competition out there, unfortunately, but they do have that brand behind them. Now, an interesting thought would be, could somebody buy them out? If you remember Beats, the headphones Beats, Apple actually bought them out. I think it was for like $1 billion. Now, I'm not going to say that Turtle Beach is worth $1 billion. It could be, but even if it's worth half of that, right now it's like $250,000 business. So even if it doubles, that could be tremendous growth. So somebody could buy them out. Maybe another business in the gaming industry, like maybe even Microsoft, because they have Xbox. Anything could happen. Just be cautious. I've warned you. But basically the main fluctuations was because they were kind of in and out of popularity. They weren't making money, then all of a sudden they were. Now, an interesting thing to them is that huge institutions aren't investing in Turtle Beach because it's such a small company. So this could definitely be something that could outperform the market. It could also get destroyed. So if you're willing to play with it, have a good future outlook toward them. You know, they have a bunch of different products out there. You could check Amazon and everything. So I just wanted to throw that one out there for you guys. So those are my 3 stock picks: dividends, real estate, and aggressive growth. Basically all of them have earnings coming out, so I'm going to be watching very closely. If it drops, that could be a buying opportunity. So let me know what you guys think. If you have any questions, comments, concerns, please leave them down below in the comments. So do you think this is the beginning of the end to the stock market? Is it going into a bear market, or is this just a normal correction? No one really knows, but we're gonna have to see in the coming months if Trump's gonna shut his mouth. We'll see. But thank you so much for watching, guys, and I'll see ya in the next one.